Feels like it was just yesterday where we saw millions and millions and millions of homeowners go through one of the worst things ever. Monthly payments going up on their mortgage due to interest rates not being fixed. Monthly payments going up again because maybe they were only paying interest and eventually the real payment had to be given. Or maybe they were in a toxic loan that gave them a low monthly payment option that eventually reset. And now these homeowners, monthly payments rose by hundreds and hundreds of dollars, which then led to the world's biggest bubble in real estate exploding, where millions and millions of people lost their homes. We had the highest rate of defaults, the highest rate of foreclosures, and the highest rate of short sales that our country has ever seen. Now, this was a decade ago, but with today's market and with the rising rumors of a potential recession nearing in 2020 or 2021, this is the thoughts that homeowners and future home buyers. So was the last recession the new normal? Is this what's going to happen again and my home value is going to go down by 50%, 60%, 70%? Well, in this video, we're going to look at facts. I've got a chart that I prepared for you to show you what the last 50 years worth of our economic history has shown and what happened to property values during the time of recession. With so much information online, it can be difficult to believe what is fact versus fiction. You've got sites like Realtor.com, Zillow.com, Redfin, and many, many more that give you information. Now, Case & Shiller is considered the gold standard when it comes to the National U.S. Housing Price Index. And this chart is going to break down the last 50 years worth of our economic history, the last 6 recessions, and their impact on the housing economy. Let me break down the chart with you so you know exactly what I'm talking about. You'll notice 3 primary colors: red, blue, and gray. Let's start with the red arrow pointing up. That represents 50 years at 5% appreciation for home values. Then you'll also notice the squiggly blue line that goes up and down and up and down. That represents what actually happened to home values during that time. And then you'll also notice gray vertical lines, some thin, some a little bit wider, and that's really key. Those actually represent the time that we entered a recession and the time that we exited a recession. So let's take a look at the last 6 recessions and their impact on home values. So if we start here back in 1975, again, you've got the red line going up at 5% appreciation. And then from 1970, let's say 1973 to 1975, there was a moment of recession. And you'll notice that the blue line at the end of a recession actually started going back up. Then again, on the second recession in the last 50 years in 80, you notice that at the end of that recession, the blue line went up yet again. Now, following that, you'll notice that this pattern keeps repeating. This blue line continues to go up past 1985 and then all the way up to 1990 where it dipped slightly, but yet again in those 1, 2, 3, 4 recession, values kept going up with like clockwork. So then after the 1990 recession, you notice that it kind of is a little bit stagnant, and then past 1995 it goes all the way up to the 2000 recession. And then here is a key moment in time, because you'll notice that not only the values appreciate, but they actually went through the roof to the highest points ever in the last 50 years. And in 2007, this peak here was the big housing bubble burst, which is when the party was over and all these bad toxic loans reset, payments stopped being made, which then resulted in banks foreclosing and short selling, and then leading our values to go down. Now, before I continue, you'll notice that 1, 2, 3, 4, 5 recessions later, or 5 recessions prior, values did what? They went up. It doesn't mean they went up 100%, but they did go up like clockwork. So as you'll notice, our economy is cyclical. So this cycle kept on repeating, and home values at the end of a recession kept going up. Now let's talk about 2007, because this was a historic event. And I gotta be honest with you, that was self-made. That was created by our financial system. When you have too many risky loans and too many people defaulting on those loans and banks now taking back properties, what do you expect is going to happen to homes? They're going to go down. But what you'll notice, here we start seeing the drop, but the important thing to point out is the drop happened before the recession right here. So the recession would have been, let's say, 2008, 2009 timeline, but the value of properties, values dropped before the recession hit, which leads to tell us that we actually created this next recession, which became known as the Great Recession is what we know it as, because it was so long and so painful. Now you'll notice after that recession, values kept dropping to all-time lows. And then in December 1st, 2011, we saw the lowest price points ever, where people could literally buy a home with their credit card. As amazing as that was. But here's the big thing to point out. The cycle repeated itself. So even after this Great Recession, which in my opinion and according to this chart, that recession was created because of the housing bubble. So values actually did not go down because of the recession. The drop in values led to the recession. And then afterwards we see things pick back up to historic levels, which is where we are today. So in a nutshell, what this data is explaining to us is that during a recession, values tend to stay pretty flat. But then once we exit the recession, values go up once, values go up twice, 3 times, 4 times, 5 times they went up. So was this last recession the new normal? Are we going to see values plummet down and I'll be able to pick up real estate with my credit card? Highly unlikely. As we see this data, our economy is cyclical. In this last recession we saw we had a big factor, which was toxic, dangerous, variable payment mortgages, which don't exist today. In the last 10 years, those mortgages haven't been issued. So if you're expecting home values to go down, you might be disappointed, because the data points that during the recession we stay flat, and then as we exit the recession, values tend to go up, and that has been proven time after time. So you might ask yourself, okay, Jorge, great information. Well, should I still buy a home? Is it worth it? And my answer to you is simple. Yeah, it's still worth it, but you want to be very careful. Get yourself into a payment that you can afford. Get yourself into an interest rate that is fixed. This way you're not subject to market volatility. And overall, it really depends on your market. For example, Washoe County over the next 5 years is expected to increase in values by 11.5%. If you have further questions, reach out to us and we can tell you what's going on in your county. If you didn't know, now you know. MTG Pro, until next time.